Hey everyone, welcome back to yet another interesting video from Trading with Grow YouTube channel. My name is Nataraj Malwade, author of Mastermind of Day Trading. We all know that market moves in trend. So market makes a zigzag movement in particular direction for a period of movement so that we can call it as a trend. But there are few tricks by using them so we can enhance our results. So basically that is what exactly I'm going to discuss today. So basically 3 tips to improve or enhance the results of trend following. Before we begin the session, if you are new to our channel, kindly consider subscribing to the channel and also click on the bell icon to get the regular updates. So let's get started. Tip number 1, longer the range, higher the trend strength. So what I mean to say is already we know that more market moves in a trend, but market moves in a different phases. So let me simplify it for you. So you can see here, assume that if market wants to move up, right? So it will not move in a 45-degree line as we expect, but market makes zigzag movement, something like this, right? So ultimately, if you see from this point to this point, market moved up, right? But if you just closely observe, so there is another phase for the market when it is trending. So usually market will go for a sideways market like this, right? So it will stay in certain range. It may be like a parallel range like this, or it may be like a triangle range like this, something. So basically when market is moving in upward direction, so it takes a break, and that we can call it as the range. The point that I'm trying to convey here is that the longer this range, right? So longer this range, assume that this particular range took 40 bars, right? 40 bars or 40 candles to form. But in another case, in another trend, we got let's say 60 bars. Instead of 40 bars, we got 60 bars. In that particular case, the continuation of the trend, let's say breakout of this particular trend, is quite high and also quite strong in this particular scenario comparing to the 40 bars scenario. So that is what I'm going to convey here. Longer the range, higher the trend strength. Let's move on to the next point, which is trend reversal patterns are also sign of a trend continuation. Most of the time we look for trend reversals, which is good. I mean, it has a potential to give you the highest rewards, and highest reward potential is there. But at the same time, most of the successful traders or most of the investors are the trend followers. They don't go against the existing trend. So basically what I mean to say is basically like, let's say if the market is making higher highs and higher lows, so which means market is trying to move upwards. In that particular case, initially shorting the market is not a good idea because we are going against the trend. So in that particular case, we are going to utilize the trend reversal patterns, like let's say we have a double bottom, right? So when we have a double bottom, we have a reversal pattern over there. And when we have a head and shoulder pattern, something like this. So let me explain you with a trend example only. Assume that market is making higher highs and higher lows and market moving in upward direction. In this case, let's say we got a something point like this, right? So this doesn't necessarily mean the trend is immediately going to reverse. So assume that market again pushed up here, and again there is a small trend reversal sign, but at the same time again it breaks this particular thing. So in that particular case, we have a head and shoulder pattern here, head and shoulder. So assume that in this particular case, market initially was trending in upward direction. In that particular case, this particular trend reversal pattern can be the strong indication of the trend continuation and also further breakout and continuation of the initial trend that we have seen in this particular trend. So this is exactly the point I'm trying to convey. Trend reversals patterns are also sign of the trend continuation. So let's move on to the next point, which is trade in the direction of the trend. This is very critical because see, we got fascinated, or we get fascinated towards finding the lows and highs. So usually people say buy low, sell high. So most of the traders, most of the professional traders look for buying high and selling higher. What I mean to say is, let's say if the market is moving upwards, right? So if the market is moving upwards, usually novices try to sell the market at the higher levels, but wherein the pro traders or the professional traders look to continue or look to align with the existing trend, because he knows that he cannot go against the price trend, or he cannot position himself against the trend, because it make no sense, because most of the people are trading in the upward direction. So it make all sense for us to look for the opportunities in the continuation of the direction. So let's say if there is a flag, right? So definitely he will look for consolidation, and after that the breakout sign in the initial trend direction. So the ultimate thing is that we have to follow the direction of the trend. So most of the time market makes a trending movement. It is just that it will not move in a 45-degree line. So it will make a zigzag movement, and it will make uncertain patterns. But if you closely observe the market, obviously market will make a directional movement in particular direction for a shorter period of a time, or a momentarily it will make a directional movement, and that is what we are going to take an advantage of, and we are going to trade in the direction of the trend. That is where we have a lot of edge. So the point here is trade in the direction of the trend, don't trade against the trend. I hope the information that I've shared so far added value to your trading. If so, why not to like this video and also share this video with your trading buddies so that it can also help them. And to get regular updates about technical analysis and trading related updates, kindly consider subscribing to our channel. Also click on the bell icon to get the regular updates. The information that I've shared so far is for educational purpose only. It is not for any buy or sell recommendation. Before taking any particular decision, please do thorough research and then take the decision, because every investment decisions are subject to market risk. Said that, I want to end this video now. See you in the next video. Until then, take care. Bye bye. Jai Hind.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.